Speed, pace, momentum, velocity. Our world is increasingly fast and our culture is immediate. Everything moves quickly. Moving your money shouldn't be any different. With Gravity, you can buy and sell Bitcoin instantly. We're building the Bitcoin bank of the future today.
Welcome to another Bitstocks podcast. This is part 2 of Bitcoin Ideologies and Economic Incentives. If you haven't already, please go and check out part 1. So let's get right into it.
Let's do it. Bitcoin's a system where essentially, exactly what you said, there's multiple different layers to this system. You've got the miners who play a very key role. And I still think miners are very much undervalued in our industry and in our community. Then you've got the developers who help, bring in new features and help keep Bitcoin doing what it's doing, right? Keeping it ticking, really. Then you've got users who don't really want to become a miner, don't want to become a developer, right? Essentially, they are users for all intents and purposes. They want to use this system. Their incentive is using it. Now, we have the other aspect, which is merchants, who they're incentivized to keep this system going, making sure it really does work. And when you look at all of these different aspects and all of these different components, and I think you said it quite rightly, everyone's incentivized to work together. Because the moment you try to, let's say you're a miner and you want to, I don't know, do a 51% attack, or you want to do something bad, you've got to keep maintaining that attack every 10 minutes. It's a very unique way of protecting yourself, encouraging everyone to work together, because the moment you have a bad actor in any one of these different components, you're found out.
Exactly.
You cannot work against the system. Now, the beauty of that is it keeps everyone in line.
Yeah.
Right?
Exactly.
Because no one wants to burn a hole in their own pocket. Nobody. And if you try to work against the system, you will lose money in one way or the other.
Exactly. It's like this system actually introduces a whole new Nash equilibrium. It basically says we're going to introduce asymmetries into the game theoretic model and make it one such that miners or the people that are keeping the system going are incentivized to actually keep the system secure. They're actually incentivized to be honest. And this is something that's never really been done before properly.
Exactly.
In a way like this.
Now, when we talk about incentives, what is the miners' incentive? What are their incentives? What are these miners fighting for every single 10 minutes? Because I want everyone here to fully understand the miners' role in this system, because it's a very important role. Mm-hmm. And it's one that we take for granted, everyone, because we just don't know what they put into this, right? Everyone thinks, miners, they're the rich guys, right? they're the ones who make all the money, where in fact, they're the ones who've got skin in the game.
Exactly.
They're the ones who've put a lot of money, a lot of resources, keep on fighting. Now, their incentive is every 10 minutes, they get rewarded newly generated Bitcoins plus transaction fees. Now, if we look at all three different models here, so we've got Bitcoin Core. Now, they believe a fee market is the way to incentivize the miners. So they believe, all right, we're going to limit the block size, and that will in turn create a competition for the space on the blockchain. And we're gonna crank up fees, and whoever wants to pay the highest fee will fight for this. Now, when you've got such a limited block size, the amount of users that it takes to create this fee, it doesn't take a lot of users,
exactly,
right? And it doesn't also encourage growth. It doesn't encourage innovation. You're now just basically saying, right, this is going to be for people who want to spend large amounts, because they're the ones who are going to spend most money, right? They're the ones who are going to want it. They spend large amounts. They're happy for $5, $10, $50 fees, right? Yeah. Now we've got BCH, who they now don't want to incentivize miners, rather they want to tax miners. Yeah. We've got 12.5%, which I believe is very strongly being considered right now.
Really,
and it's
really strong consideration, yeah.
I mean, I've not really kept up to date with it too much, but the last I heard is it's happening. Yeah. Right? 12.5% miners will pay to developers for maintaining BCH. Tell me what you think about that.
I mean, just from the economics perspective, it just can't run.
Doesn't work,
this
right?
This is kind of the issue that we have when you look at the mine side of things being undervalued. The balance of power so far has always been on the development and the devs and them changing a protocol and trying to make it better. quote unquote. But when you realize actually the protocol needs to be locked down, that needs to be stable so that the miners can truly put money into this and make it a enterprise adoption. They will really want to put money behind this, but they can't do that if the protocol keeps changing every day.
No one's changing IP.
No one wants...
Imagine that. What would the internet do? If every single 2 minutes someone wants to change IP, hey, we're going to charge you 12.5% every time someone... Right?
It will be so tricky, right?
Doesn't work.
And this is where BSV shines, because BSV, in the recent Genesis hard fork, which happened on February 4th, has actually allowed miners to scale to an unlimited level.
Exactly.
So this basically says the 1 megabyte block, we're taking that away. This can be 1 gigabyte blocks. It can be 1 terabyte blocks. It can be as big as it needs to be, depending on what transactions are being put into the actual block.
Incentivizes people to actually use it.
Exactly.
Right? Because we now don't have this worry about if I build something like we've had CryptoKitties, which came and completely destroyed Ethereum, right? One game.
Yeah, that was a crazy time.
Destroyed Ethereum.
Clogged the whole system up, couldn't scale.
Exactly. Now that's a real test. Now, if you're a true developer who wants to build, right? You want to build these new and innovative different platforms. You just want to build. You need to have some sort of infrastructure and foundation which you're comfortable with, because the moment you try to do something, and I can imagine so many people who wanted to build something on top of Bitcoin and just thought, I can't do this here.
Yeah.
I've now got to either create my own cryptocurrency or create my own digital asset or create my own infrastructure, which reinforce this divide and conquer mentality.
Exactly.
Divide and conquer, right? We were once a community of, we won, and then now all of these limitations due to innovation and, the bottleneck created this different factions.
Exactly. And that was the issue. It's like, if Bitcoin was allowed to scale without the 1 megabyte blocks in the first place, things like Ethereum, things like all these other tokens would have decided to build on Bitcoin.
Exactly.
And it would have been in a place where there was no need for substitute.
Vitalik tried to build on top of Bitcoin.
Exactly.
He went to core developers and he said, hey guys, I've got this idea. And they were like, meh, no.
Exactly. And that's the thing.
Right.
Like, when you go down to the history, it should have been that. So all the issues that we have with 1,000+ coins now only came as a result of one wrong decision on scalability. And thankfully enough, we've been able to have, a faction come out that takes it back to what the true protocol should be.
Locking down that protocol.
Locking it down, allowing people to scale where you don't actually have to worry about the underlying space, because it would always grow.
Exactly. Nothing is going to change,
Exactly.
It's like you're trying to do something and someone just whipping the carpet from underneath you.
Exactly. It's just not good enough. And when you look at how mining has only started to come to the forefront of the actual industry in terms of talking about their value set and what we're doing here, it's because we've really been focused on price. We've been focused on speculation, and the speculation houses have dominated for the last 5-6 years. So
yeah,
we're
exactly
talking exchanges.
We're talking exactly. Exchanges have made a big chunk of money in this space. I mean, we've got now exchanges who have taken matters into their own hands and said, hey, we're going to delist, right? This whole delisting.
Exactly. They believe their power is so much that they can just dominate and not allow any other, coins that are not within them to be in the actual space.
Yeah.
And as a result, it's kind of got to their heads a bit.
No, it definitely has. I mean, they've taken power, and it's kind of, I'm seeing a very similar trend of what happened with the developers when we started to have the original block size debate, when the developers were, hey, we believe it's 1 megabyte and we're going to stick to this and this is what we're going to want to do. Now, we've got the same thing with exchanges. Exchanges said, hey, no, we don't believe this should be here. We don't like the way you're doing this, or we're now going to take matters into our own hands and we are going to essentially stop you and stop a free market. Because essentially, the market that we're in right now is a free market, right? It gives everybody choice. Choice is a very beautiful thing that people really misunderstand and take for granted. You have a choice. And that's what these exchanges, because of their dominance, because they've got this stranglehold around the current utility, and that's because there is no utility right now, right? Well, what is the utility in Bitcoin?
And that still needs to be grown. And it's okay for this 5 years has happened to have happened. In every kind of technological revolution, there's always certain cycles that happen. And there's a great book by Carlota Perez, which actually talks about this in deeper context. This is going back to, the 1800s. We're talking about the railroads. We're talking about all other key technological revolutions.
I think you mentioned this book before.
And it's great because it's like one of those things where it always goes from an eruption phase. And this is where the first idea comes, people want to be a part of it, They want to see where it's going. And that's kind of the hobbyist phase. This is where we can see that in the first 5 years of Bitcoin. Then we get into the second phase where it's like the frenzy. This is where we're in a place where it's all about price, it's all about speculation. And this is kind of what we've been in the last 5 years. And exchanges have been able to make a lot of money in that time because they're allowing people to speculate on which coin is going to be the best coin. Where is the value? As long as I can try and find the value before somebody else, I can make a lot of money. And this is also where we can see the financial capital always gets ahead of production capital. We've seen this so many times in Ethereum and ICOs where we can have billions raised and no product, which is incredible. So you can see that that's a frenzy phase. And we start to see the end of that 2017, 2018 when the volumes in derivatives were hitting billions a day.
Yeah.
But now we're getting into the synergy phase. And now the synergy phase is also, very key aspect of any revolution.
The birth of a new era for Bitcoin, right?
It's basically taken us to a place where we can actually work in and in line with the current infrastructure. And this is what we're going to start to see now, where we start to work with the FCA, when we're going to start to work with governments, and we're going to start to see how we can synergize and integrate the system into what is already known to us. And then we're going to go into the last stage, which is maturity. And maturity is hopefully where we're going to see the true utility. This is where we're going to start to see real applications that we couldn't even dream of.
And I can't wait for that, because
all over this place.
That's what it's all about, right?
Yeah.
That's what it's all about, real innovation. 20 years ago, would we have dreamt of the iPhone, right? The innovation of the iPhone, a device, where you keep with you at all times, and it's this powerful computer. No one would have dreamt that. And that's the beautiful thing about technology and innovation. It takes one person or a group of individuals to create a vision, which can then be implemented because they have the fundamental infrastructure there to them. And it's something very interesting when we're talking about innovation, because I think you touched on it, where the financial system really does to take a leap ahead. Money comes in way too quicker than it really should have. And we've seen the money go into wrong applications rather than growing the infrastructure and trying to grow the underlying protocol. We've seen money flow into creating products like 1,000x leverage, 100x leverage, 125x, going to this gambling mentality. And that's the big issue, where now with the halvening approaching, we're going to see a leap in the mining industry. Yeah. We're going to see a change where we now are going to see the new beginning for Bitcoin, where we start to step out of this era and into a new era, which allows us to see utility, see thriving utility, thriving applications. And
exactly, I feel like that shift from price utility is going to happen this year.
Yeah.
And this is where we're going to start to have a lot less of a focus on what's going on with regards to exchanges, and a lot more of a focus with regards to what's happening with mining. And I think the mining industry is really going to come into its own this year.
Yeah.
This is when we're going to start to see miners start to dominate. We're going to start to see big enterprise adoptions, data centers really working on scaling Bitcoin now that they have so much more space they can use in a block to be able to earn their transactions back. Because when a miner wants to make money, they're saying, all right, in every single 10-minute block, it's made up of a reward subsidy and transaction fees. Now, when you have 1 megabyte block, it basically says most of it is going to be the subsidy and the fees only has a little bit of a space. But when you have an unlimited block, the reward subsidy will always be around the same, but the fees can go as much as what you want. And what that ends up having is the dominance of the fees over the reward subsidy starts to come to fruition. And this is when we end up in a place where the subsidy, which is effectively a barometer for price, starts to take less of a kind of dominance over the actual block compared to the fees.
Yeah.
And this is when we're going to see that shift in the halvening later this year when we move from price to utility.
Yeah.
And this is great because, the miners can really start to grow this year.
And it will professionalize mining, right?
Exactly.
Because right now mining is still an industry which is looked at as, these guys are operating in these, different countries, China, we're here in Mongolia. And they don't really have a true purpose. Because right now they're all fighting for this reward. They're all fighting for the block reward. Now we know that is not going to be an eternal reward with the way that the Bitcoin system works.
Yeah.
Now they need to find different sources of income, because essentially they're underpinning the security. They need to be incentivized to find this different, let's just say, source of income. And this is where the professionalization of mining becoming more of an institutional game. You touched on it, data centers.
Exactly.
Because that's how it's got to go. We're now going to have potentially terabyte blocks.
Yeah. And it's like new business models come out of this, like you said already. So this is like, we can really see the mining industry become professional. And it's great because it's like, what is the key unit cost for any miner? It's electricity.
Yes.
So we get to a place now where they're incentivized to try and drive energy lower. And it's crazy because a lot of the times when we look at the actual mining industry, it's always about, the mining industry has so much energy use. And, you know,
I've heard that one so many times.
All the time. It's like, the mining industry is so bad for the planet. When you actually look down into the details, the majority, actually 70 to 75% estimated of mining energy right now is from renewable energy sources.
Wow.
So this is incredible, where we're already at a place where it's probably the most efficient energy production place in the world, system in the world, and we haven't even got started yet.
And it's forcing innovation, right?
And
I had no idea 70% is renewable energy, and
exactly.
That's probably gonna open up doors for renewable sources to be more innovation in renewable energy, to the point where we get to 0 point energy.
Exactly.
Right? You know, if
we
we keep going and we keep trying to innovate, because essentially the cheaper electricity gets, the more profit the miner's going to make. So we're starting to see a lot more impact on miners and how they're going to start to see things. They're going to be investing in computation, right? We're going to see computational investments. Then we're going to see investments in energy, renewable sources, which we're starting to see already.
Yeah.
Now that is going to have an impact across the whole planet. We're going to see computational power increasing. We're going to see Moore's law, for instance. You know, perfect example. Moore's law. I'm sure Moore had no idea that his law would, you know, what he stipulated would be, you know, when did he come up with this law? I think we're going to need the guys to put that down when Moore's law first did come out. And it's been a trend which has followed very closely across the mining industry. We've seen it. You know, we've seen the development of new ASICs come out every 2 years or
become more
professional. We've seen efficiency increase. We've seen the usage of electricity for these machines decrease. It's come to a point where mining as an industry, we've seen Intel talk about getting involved in mining. We saw Nvidia, you know, some of the biggest players in traditional silicon come into this space. It's a business revenue for them, which they're now starting to see a little bit more legitimacy, rather than this hobbyist who's sitting in his basement, you know, mining Bitcoins, which is BTC's view.
Yeah, it's not where it's going to go. In terms of, if we want to be a world system that works for everyone, it needs to be a place where it works for everyone on a grand scale and it scales. And that's exactly what you said. Once you have a lot of these professional players come in and provide it with the infrastructure, then we can really start to see utilities, applications that we didn't have before. And on one level, we have the miners bringing down energy costs because they're incentivized to. Economically, they need to get their costs down to be able to mine more efficiently. And on the other side of it, we have a lot more of innovation and efficiency in the fact that because they're incentivized to do it, we create a whole new economic system which makes the world better. And this is what Bitcoin does for us.
Hope you enjoy that. The third and final part focuses on the key dates in 2020 around the halvening and the supply and demand dynamics around that. If you like what you heard in parts 1 and 2, give them a thumbs up, subscribe to our YouTube channel, and look out for part 3.